Section 1. The Market Roller Coaster, Buckle Up. The first half of 2024 has been a wild ride for investors. Volatility is the name of the game. Markets are swinging up and down, reacting to news about inflation, interest rates, and global uncertainty. Just when you think things are settling down, another curveball gets thrown. It's enough to make even seasoned investors a little queasy. But remember, volatility isn't always a bad thing. Volatility creates opportunities. Savvy investors can capitalize on the swings. They look for bargains when prices drop and ride the wave when markets rebound. Of course, this requires careful analysis, a bit of nerve, and a long-term perspective. It's not about timing the market perfectly, but about understanding the forces at play and positioning yourself accordingly. So what's driving all this market turbulence? Let's break it down. Inflation, while showing signs of cooling, is still a major concern. Central banks are raising interest rates to combat it, but this can also slow economic growth. On top of that, geopolitical tensions, particularly in Europe, are adding fuel to the fire. It's a complex web of factors that's keeping investors on their toes. This market environment is not for the faint of heart, but for those who are prepared to do their homework and stay informed, it presents a unique opportunity to potentially profit from the swings. Remember, knowledge is power. The more you understand about the factors driving market movements, the better equipped you'll be to navigate the ups and downs. In the following sections, we'll delve deeper into these factors, examining the performance of key sectors and exploring the impact of global events. Section 2. Tech takes a hit, energy surges. A tale of two sectors. Not all market sectors are created equal, especially in times of volatility. The first half of 2024 has seen a stark divergence in performance between technology stocks and traditional energy companies. Tech, once the darling of the market, has taken a beating. Rising interest rates have made it more expensive for these companies to borrow money to fuel their growth. Energy, on the other hand, has been on a tear. The conflict in Europe has disrupted global energy markets, sending oil and gas prices soaring. This has been a boon for traditional energy companies who are reaping record profits. But it's not just about geopolitics. The global push for energy security has also benefited the energy sector. Countries are looking for reliable sources of energy, and traditional energy companies are well positioned to meet this demand. This divergence highlights the importance of diversification. Investors who were overly concentrated in tech stocks have felt the pain in recent months. A more balanced portfolio with exposure to different sectors would have provided some cushion against these losses. Of course, predicting which sectors will outperform in the future is never easy. The key takeaway here is that sector rotation is a natural part of the market cycle. What's hot today may be cold tomorrow. Investors need to stay agile and be prepared to adjust their portfolios as market conditions change. Don't get caught up in the hype. Do your research, understand the fundamentals of each sector, and invest accordingly. Section 3. Interest rates and inflation. A tangled web. Inflation and interest rates are two sides of the same coin. When inflation rises, central banks typically raise interest rates to cool down the economy. Higher interest rates make it more expensive to borrow money, which can slow down spending and curb inflation. Sounds simple enough, right? However, in the real world, it's a delicate balancing act. The Federal Reserve has been aggressively raising interest rates in 2024 in an attempt to tame inflation. While there are signs that inflation may be peaking, it's still significantly above the Fed's target rate. This suggests that further interest rate hikes are likely. The problem is that raising interest rates too quickly or too high can also trigger a recession. This fear of a recession is weighing on investor sentiment. Businesses may hold back on investments and consumers may cut back on spending if they are worried about the future. This economic uncertainty is adding to market volatility. Investors are trying to anticipate the Fed's next move and assess the likelihood of a soft landing for the economy. The relationship between interest rates and inflation is complex and constantly evolving. It's essential for investors to stay informed about the latest economic data and policy announcements. Pay attention to inflation reports, interest rate decisions, and economic forecasts. Understanding these factors will help you make more informed investment decisions in this challenging environment. Section 4. The Global Stage. Geopolitics and Market Drama. Geopolitical events can have a significant impact on financial markets. The ongoing conflict in Europe is a prime example. It has disrupted global supply chains, fueled inflation, and created uncertainty in energy markets. Investors are closely watching the situation, trying to assess the potential economic and geopolitical fallout. The war in Europe is not the only geopolitical risk on investors' radar. Tensions between the United States and China continue to simmer, particularly over trade in Taiwan. These tensions have the potential to escalate quickly, with significant implications for global markets. Political instability in other parts of the world, such as the Middle East and Africa, also adds to the uncertainty. Geopolitical risks are difficult to predict and even harder to quantify. They can arise suddenly and unexpectedly, sending shockwaves through the global economy and financial markets. Investors need to be aware of these risks and factor them into their decision-making process. This doesn't mean avoiding investments in certain regions or sectors altogether. Rather, it means understanding the potential risks and rewards and diversifying your portfolio accordingly. Consider investing in companies with global operations and exposure to different regions. This can help mitigate the impact of geopolitical events on your portfolio. Stay informed about global events and their potential consequences. Knowledge is your best defense against the unexpected. Section 5. Navigating the storm strategies for investors. Investing in volatile markets can be daunting, but it also presents unique opportunities. Here are a few strategies to help you navigate the current market environment. Stay calm and don't panic. It's easy to get caught up in the emotions of the market, but it's important to stay calm and rational. Avoid making impulsive decisions based on short-term market fluctuations. Focus on the long term. Remember that investing is a marathon, not a sprint. Don't let short-term volatility derail your long-term investment goals. Diversify your portfolio. Don't put all your eggs in one basket. Diversify your investments across different asset classes, sectors, and geographies. Consider dollar-cost averaging. This strategy involves investing a fixed amount of money at regular intervals, regardless of market conditions. It can help reduce the impact of volatility on your portfolio. Seek professional advice. If you're feeling overwhelmed or unsure about how to proceed, don't hesitate to seek professional financial advice. A qualified financial advisor can help you create a personalized investment plan based on your individual circumstances and risk tolerance. Remember, there is no one-size-fits-all approach to investing. The best strategy for you will depend on your individual financial situation, investment goals, and risk tolerance. What's important is to have a plan, stay informed, and be prepared to adjust your strategy as market conditions change. Section 6. What's next? Your portfolio, your call. As we move into the second half of 2024, market volatility is likely to persist. Inflation, interest rates, and geopolitical tensions will continue to be major drivers of market sentiment. The road ahead may be bumpy, but for investors who are prepared, there will be opportunities to profit from the swings. Now it's your turn. How are you positioning your portfolio in this volatile market environment? Are you taking a defensive approach or looking for opportunities to buy on the dips? What are your biggest concerns about the market right now? Share your thoughts, insights, and questions in the comments below. Let's learn from each other and navigate this challenging market together. Remember, the best investors are always learning, adapting, and evolving.